Hey guys, today we'll talk about a very interesting company. As you can see on my screen right now, RFK Jr. is popping the Alp pouch, as well as Tucker Carlson, who is also popping a pouch of his own brand, Alp. So Alp is owned 50% by Tucker Carlson's company and 50% by this other company that we will be talking about mostly in this video. It's called Turning Point Brands, and Turning Point Brands has some traditional categories that have mostly stagnated, but this segment, which is the nicotine pouch segment, which comes under the modern oral segment, has been taking over. So I had initially covered my thesis about this company back in September 10, back on September 10, 2024. At that time, Al pouches did not launch. The TPB was just running its traditional business like across its two segments, Stokers and Zig-Zag. The business was pretty much stable and generating a bunch of cash flow, but like there was no real growth. But then FRE came along. At that time, the FRE revenue was less than $5 million. But my thesis at that time had been that if FRE was able to capture even 5% of this growing market with Zin's regulatory issues as well as stockouts, then TVP is going to be at least a double. And if the segment doesn't go anywhere, that there's nothing to lose, and that's exactly what has played out. So I was lucky with this thesis. So we'll talk about the segments. The traditional segments are not that interesting because they're just stagnated. So they basically run their businesses across two segments. One is the Zig-Zag products and the other one is Stokers. So under Zig-Zag they have rolling papers and cones and cigars and wraps and smoking accessories. The key brand is Zig-Zag here. It's a well-known brand. It's it has a massive market share, almost mid 30% in its categories, and it can keep on continuing and keep on leading to a sustainable growth over the next few years. But it's certain, like recent years, it has kind of stagnated, and same goes for Stokers and the loose leaf chew, moist snuff, and and the other segments across Stokers and beech nut and everything else. The interesting situation with these brands is that they're in the middle segment, so there's a lot of people who are trading down given the inflation and the macro environment that we are in right now. So they're a stable business. They still have a bunch of distribution levers that they can pull to gain more sales, but I don't expect them to grow more than 10%. And even if the business grows at 10%, the traditional business is going to be generating almost $60 million in free cash flow. And the cash flow requirement to run the business is almost zero. So this is a very interesting business. It's like your usual tobacco business that doesn't have too many things going on, but it's a cash generating machine. The interesting part in this entire business is the FRE and the Alp nicotine pouches, which have been seeing an amazing growth. As I talked to you about this earlier, back on December 2024, this segment was only generating about $7 to $8 million. Recent quarter, it has gone up to $22 million, and the management expects this segment to grow to over $100 million by the end of this year. So, as I said, Zig-Zag products continued profit and margin growth. So it has stagnated. So there's not much going on in this segment. Gross profit has stagnated as well. Whereas Stokers, you'll see this growth, but this growth has mostly been turbocharged by the nicotine pouches segment. This is still a better business than Zig-Zag just because of the products it is in and the market share that they have. But still, I wouldn't expect them to continue to grow at this 11% CAGR x the modern oral segment, which is the nicotine pouches segment. So this is basically what the modern oral market, according to the management, is. The management expects this market to reach $5 to $7 billion by the end of this decade. We will talk about what this would mean for the stock price and what would the targets be if the market is able to reach if the company is able to reach its ambitious goals. So here's the search results for Alp pouches and free nicotine pouches. You'll see that they are still exploding quite higher. And the recent quarter that the management reported $22 million in sales. So this should continue to go higher as we go forward. The website traffic for Alp pouch and free pouch is continuing to go higher as well. Free pouch is completely owned by TBP, and TBP mostly distributes this product through traditional channels. Just your normal store networks and CSD places and stuff like that, whereas Alp pouches is mostly D2C. It's mostly on the website, and you'll see that's why the web traffic is way higher than free pouches. But the reception has been great, and Alp pouches ALP pouches also sell at twice the price for free. So that's the other benefit of the growth in ALP pouches. The revenue is going to have better margins, and that also means better growth for them and more free cash flow. So this is another website called NicoKick. So this is the main website where people can people consume the nicotine pouches. You'll see Zyn is like almost always out of stock, both on NicoKick as well as northerner.com. So that this kind of forces people to go into other products, and that has been one of the reasons why ALP and Free continue to gain share and might continue to gain share as we go forward. So the search trends on these websites also seem quite quite interesting, and they'll probably keep on going up. So the net sales increased 28% year over year to 106 million in the first quarter. The modern oral net sales for Q1 were $22 million, and the management has reaffirmed its guidance. The nicotine pouches sales guide was initially when they announced Q4 results was 60 to 80 million, and now it's 80 to 95 million. But I believe it's probably going to be around 120 to 130 million by the end of this year, because this management is known to be more conservative. So as the leading online retailers so this is basically NicoKick, who's owned by High Up Group. This is what they've said about ALP. As a leading online retailer for nicotine pouches, we've seen firsthand what resonates with adult consumers. Based on our research and ALP's launch trajectory, this brand is set to make waves, and we are proud to support that growth and ALP's preferred online partner. So ALP is going, they're not only selling it on their website now, they're going to different distributors where they'll be selling as well, and it does appear that the reception has been great, and it's like high praise coming from one of the most leading websites in this space. So ALP is poised for growth. ALP probably is going to be at least 2 to 3 times bigger than Free, just because of Tucker Carlson's brand behind it. And the biggest concern with this market has been possible regulatory capture, and with Tucker Carlson being involved, and we know that RFK Jr. consumes these products as well, the regulatory problem has gone away, and now it's just about scaling the company. And the management is waiting for this business to reach scale so that they can expand. They can expand the production and expand the sales, and now they're starting to get into that point. So as you can see here, the management said that in Q1 their sales for pouches was 10x year over year and 2x sequentially. So this is amazing growth right now, and they're just entering that phase where this could go parabolic, and those numbers will start to get really, really big. And so the management believes that the company can reach $5 billion the category can reach $5 billion, and the management can gain double-digit market share in that space. So that would mean, even if they were to go get 10% of the entire market, what would that mean? We will talk about it in terms of valuation in the upcoming slides. So in order to best position the company to capitalize on this multi-billion-dollar opportunity, we are making significant investments in the business, refining our route to market strategy to prioritize FRE and ALP with continuing to generate strong cash flow from our heritage brands. So this is basically what the playbook is. The traditional brands are cash cows, so they're going to harvest that cash and put that cash behind this growth engine of FRE and ALP. And if they continue to keep on doing this and enhancing their sales, this could be a huge segment for the company alone. So this is something to watch out for, and I think they're poised to even get to like $300 million in sales by the end of this decade. We will cover that and see what my targets are for this stock. So this is another person from the management. They said that we made exciting progress. We've continued to receive favorable consumer feedback, increasing reorder and repeat purchase rates. So they're also just getting into 7-Eleven this year, and the management has been tight-lipped about what other plans they have, because they have said that they have other plans for distribution gains, and those will lead to a robust increase in sales. So I think the guidance regarding 80 to 90 million is very low. It's probably going to come in at least at 120 to 130 million dollars, which would mean like the stock re-rates, and we will talk about that, as I said in the last slide. So this is the other thing that I was talking to you about. We are in active conversations with other top nationally recognized chains. We have some rollouts and enhancements planned for later this year. Nothing that we're quite comfortable sharing publicly yet, but some exciting stuff on the come here. So they are going to distribute through 7-Eleven and potentially some other distributors as well, which would lead to a huge amount of sales increase and just brand recall as well, which then helps your website traffic, and then that helps your website sales as well. So ALP is mostly going to be sold online, which helps with the margins. So every sale is like the selling point for ALP is almost twice as that for FRE, although it's the same product. And it's a 50-50 joint venture, so they don't really have to spend on marketing and anything else, and they can reap the rewards of just the distribution and the production of the product. So let's get into some valuation analysis and see what we can expect from this company going forward. So I have lowballed the traditional business. I'm saying that going forward for this company or the traditional business, discounted for future cash flows, will probably be at $50 million per year. That means that the valuation of like at 10 times, I think it's fair given what the other peers trade at in this sector. We can say $500 million for the traditional business. So if the modern oral segment, if the company is able to reach 7.5% share of the modern oral segment, we can see that their sales per year would be around $450 million. By say like 2030 is what I'm anticipating under this scenario, and at 5.5 times value. This is basically the midpoint. So generally the companies in this segment have sold at 4 to 7 times sales. Let's take the midpoint of it. So 5.5 times sales. The valuation of the modern oral segment would be $2.4 billion, which would put the market cap of the company at around $3 billion versus 1.3 right now. So it'll almost be a double over the next 5 years. And in that case, we're expecting a 15% CAGR, which is not bad, because like this is almost like a base case scenario in this situation. Whereas the best case scenario would be that modern oral, they're able to get to a 10% share, and their sales by 2030 reach $600 million, which I think is going to happen. And their industry multiple, like let's say 5.5 times. So other thing to note is that the industry multiple is 4 to 7 times. I think ALP is always going to be a higher multiple as compared to free. But still, like if ALP is 7 times sales, you're still looking at a minimum of 25% CAGR going forward. So this is most likely the scenario, and I could see the multiple expanding as as we see the sales momentum start to get into that phase where we see like every quarter. Now it's gotten to 22 million, next quarter it's 30 million, next quarter it's 35, 40, like basically what Zin had experienced when they were starting to really ramp up their demand and supply. So the fact that it's a stock, it's a company that has such close ties to the Trump administration, there's a very low probability that there'll be any issues in terms of regulatory problems that initially it was highly expected that this sector is going to go through that. So this is one thing that I think they have going for them, and I do believe that this stock is still probably going to be a double in the next 3 years. So in the first video we did cover Celsius. I would really appreciate you if you can please subscribe to this channel. I would keep on like to share more videos with you which have, or like more stocks with you which have good upside in a very short period of time, hopefully. Celsius, as we talked about, is already up 10% since we covered it. It was a 4% allocation. I would put TBP at about 6% allocation. The interesting part here is the fact that the market itself is very volatile, and we've seen a huge amount of gains over the last like 10 to 15 like trading days. There's a chance that this year is very volatile. So companies like these would probably be less volatile in that kind of scenario, and they have good earnings on the horizon expected, so they should see good upside with minimal downside. When we do see some high beta stocks which have high potential, I will definitely cover them, but right now I'm a little bit I'm in a mode where I'm a little on the conservative side, just given how much the market has risen. So based on where we are in in the market cycle, I would be sharing ideas based on that. So hopefully you like this video, guys. Please comment, like, share, and subscribe to the channel, and I would really be grateful for that. Take care. See you in the next one. Bye.